Hello, everyone. Welcome to the weekly roundup. Today, we will cover interest rates, growth, and market sentiments. Hello, Ben.
Hi, Eva.
How you doing? Good day out there.
Nice and sunny. That's awesome.
Oh, that's awesome. Okay, we're going to get right into it. A couple of interest rate announcements in the past few days. Both the Bank of England and the Fed maintained rates. Anything worth noting from the announcements in terms of both inflation and growth trajectory?
Yeah, so a lot of what's going on, I guess, in the world has a lot to do with the tariffs proposed or not proposed, on off, on off, and so I think that's created a tremendous amount of uncertainty, and so you can see it across everything, consumer sentiment, business sentiment, but also inflation. So to your point around what's it doing, so it's causing an uptick. We saw, particularly in the US anyways, we saw deflationary forces for pretty much everything for the last 6 months. But the most recent reading saw a slight uptick in food, food from home, like groceries and food out. So you're seeing an uptick in inflationary numbers. And so I think that's put some pressure on the Fed to say maybe we have to stay with elevated rates. And if you listen to Chair Powell, he's very concerned, I guess, with what's going on and doesn't exactly know what direction to take interest rates. We still think rates come down this year, but with the uncertainty, I think that's kept them on hold. Additionally, the employment numbers in the US at least have been pretty good. So it's given him a bit of room where he's concerned about what's going on with inflation. Employment numbers are okay. So he says maybe we continue to stay interest rates a little bit higher. In the UK, I think theirs is more related to the fact that inflation's ticking up a little bit, and that's why they're on hold. And the economy is deteriorating a bit, but they're concerned about inflation.
Yeah. Speaking on tariffs, there seems to be a bit of calm there. Well, up until today. What can we expect next week? What's going on there?
Yeah, so that's a great point. It was when we wrote this yesterday. Everything was quite calm until we went to bed and woke up to the potential auto tariffs. And so, gosh, I listened to a political economist this morning just talking about maybe this time is a different presidency than last time, which was last time was a lot of bluster, a lot of talk, and do the opposite of what he said. Maybe this time he's come in with the view of you should actually listen to what he's saying, and he plans to or intends to move forward on this. And the attack on the auto sector, obviously, we see the stocks down for GM down 6, 7%, something like that at the open. Um, the he might end up getting what he wants because we saw Hyundai say they're going to expand their plant, put in X amount of dollars to develop and make cars in the US. Maybe he's able to succeed, or maybe they're just appeasing him until he leaves. But it looks like some of the companies are starting to lean towards let's find a solution or let's find or something that we can do that allows us to move forward. I'm not sure that anyone totally understands how intricate the web is of everything that's made. There's not a single thing that's made in one country in the world anymore. Everything takes multiple pieces from different areas. So the tariffs were quiet until this, and this is pretty material, particularly with Canada and U.S. So his other, obviously, if you read the news headlines, it said to essentially a warning shot across the bow to Canada. If you team up with the EU, it's going to be worse for you. So typical way to approach things. So we'll see. But that was pretty big news overnight this morning, but was quiet up until then.
Speaking of Canada, the new Prime Minister has called a snap election for April 28th. How is the market taking this?
So I think the generally the markets, a lot of the market's attention has been towards what's going on in the US and the tariffs. And so with Carney coming in. It's a relative calm, I guess. It's a from a market economic perspective. He's a known entity. Obviously, senior leaderships in finance throughout both Canada and England. So he's got lots of good contacts, very well connected, and he seems to be turning his attention towards politics now as you start to see his ads come out and so on and so forth. Um, maybe he's going to be a better politician than maybe initially thought. And so the market definitely has taken it as a positive so far. Polling numbers, if you look at them and trust that, they have a liberal lead right now. It looks like most of those votes have moved over from NDP to liberal. So yeah, I'd say the market's interpreted it pretty well. And you know, he's a liberal, but he's probably somewhere more around the center, which I think is going to be good and better for the markets from a perspective of we're going to get somebody closer to the middle that can kind of look at and maybe talk to both sides of the aisle, which is really what Canada needs right now.
Let's talk a bit about market sentiments and trading this week. How's it?
So we dipped down last week. Sentiment got to, I think at one point, maybe around 17, 18, which is quite low. So that's a good thing as a counter signal. And we've been hovering around the 20 to 30 since then. I think the start of this week we were around 26. And so sentiment's still generally negative. And so when I look at, and we talk briefly just about consumer confidence and business confidence, we're hitting, if not a current low, an all-time low in consumer confidence. And so obviously that's not a good thing for Canada. And if you look at US business consumer confidence, also low. So it's just that I'd say overarching fear of what's going on right now. The one point that I continue to come back to, and I know we've spoken at the annual outlook and we speak about fairly frequently, is just about money supply and financial conditions. So financial conditions are getting easier, rates have come down, there's more money in the system. Central banks are stopping their quantitative tightening, which means there's more liquidity. And so that stuff lags as it comes into the markets and economy. So I do think, and like I wrote in the daily, I do think when we start to see that shift where the consumer and businesses start to get more comfortable, we know what the trade and tariff restraints are going to be. You probably see a pretty good move. And that's what I'm starting to think about from a portfolio construction perspective. But yeah, to your point, consumer sentiment, market sentiment, pretty negative right now.
Yeah, let's see the charts.
All right. Okay. And as I mentioned, we're just recording this on Thursday, March 27th at 1 p.m. So anything that happens after this, we certainly can't comment on, but we will comment on that next week. So this is one of our research providers. I think it's always interesting just to think a little bit ahead. And we always look at multiple sources for what are the potential forecasts, what are the views, where do we think things are going. And Argus's research is quite good and gives us a pretty good look ahead. These are contingent on the status quo, so to speak. So if there is anything materially different that happens between now and obviously the end of 2026, then there's a lot of ground to cover. But it's a great place to look at just around our conversation around where we sit today, around these levels. Where do we think that Fed funds rate, so that's the FOMC, where do they think rates are going? So this is, as I mentioned off the top, where inflation has ticked up a bit, so there's been some concern. But if you do look at the direction generally of where they think rates go from here, I think that's a reasonable thing to think about and consider. The other thing that I think that, at least that I noted when I looked at their forecast, certainly from a rates perspective, is, we look at the 10-year where we are today, we're around 4.5. Oh, sorry, 454 right there. And their view is that we see a bit of a downtick later this year, and then, excuse me, a move back to these levels. But the thing I found most interesting is that they stay elevated around these levels. And so when again you're thinking about asset allocation, when I'm thinking if I want to have some stocks and bonds, where 3 years ago when rates were at one, it was a lot more difficult to buy bonds because you didn't get any protection in coupons. So if the rates are going to stay in these 4 to 5% ranges, that's actually pretty good from a portfolio construction perspective. The other piece that I think we should think about is just obviously more short term, which is the CPI, which I mentioned, which is a consumer price index. We see that relatively even and then starting to fall as we head into next year. So that also is a point just around, maybe we are going to see some ease off on the this inflationary talk, but certainly something to continue to pay attention to, especially as we get to this view of more tariffs and costs. And, if costs continue to stay elevated, then that's going to have a negative impact on GDP and consumption. So this is from our economics team, just an outlook on GDP. So always great to look at this. I think it's important to note the direction as opposed to necessarily the absolute level. And so the view here is for Canada to GDP to grow at 1.5%, US GDP to grow at, so this is last year's at 2.8. And then if we look at where we are going to be this year, 2.1 and 1.2 in Canada, and US relatively. So I think it's important just to think about this, what it looks like. I mean, this is pretty materially slow growth. And so maybe we get this backdrop where trade tariff talk and maybe slower growth than anticipated. Certainly something to think about. Well, I think there's been a lot less talk about what's going on in emerging markets, international markets, but if you look at China and India growth, GDP growth, those countries continue to still grow quite rapidly. And so I think that's important to think about when you're investing your money as well. So a couple more just to the point about, as I say, consumer confidence. And so where we look at Canada here, everyone remembers the COVID crisis of 2020. And so we're starting to hit those levels again. Or actually consumer confidence is lower than in 2008. The US, you're starting to see it fall as well. And so this, I think, will be an important statistic to watch from a growth perspective because a big percentage of the US GDP is consumption based. And so if the consumer feels pressure and squeeze, that's going to have an impact on GDP. And this chart I always love to look at as well. It's the economic uncertainty. And so this is great just to think about just where we are, just to give you a realization of scale. We've had multiple periods where this was COVID. There was huge uncertainty. 2008 was massive as well. Some remember that. And into the mid 90s and 2000, we're at the by far one of the most economic uncertain times as a result of the tariffs and trade war going on today. So, if it feels uncomfortable and it feels really you feel really insecure about what's going on, it is as a worst reading that we've seen in a long time. And just one more quick take just on companies and successful companies in Canada. And so this is Descartes System, a Canadian technology company. And so sometimes I think it's interesting. You look at businesses and what they're doing and how they're doing. Do they continue to grow or not grow? And so particularly as businesses get quite big, it's interesting to look back at what's made them successful. And so Descartes, this is their acquisitions since 2015, so 10 years of acquisitions. So if you look at, they've amalgamated and consumed so many companies over the last 10 years to become a very successful Canadian technology company. They just did a recent acquisition as well. Market's quite optimistic and positive about it. But I just think it's interesting to see that there's a lot of technologies companies that don't necessarily put as much into R&D, and they go out and buy a company that they want that spent a lot of time putting better technology and systems in place. And so this is just a quick Canadian success story, Descartes Systems, and how quickly they've been growing through here. Just before we throw it back to Eva and have some questions here, as a reminder, the opinions expressed do not necessarily reflect those of NBF. The opinions are of mine today, and if you have any questions, always consult your advisor and or me to answer any further questions you may have.
Thank you, Ben.
You're welcome.
So, what's on the agenda for this week or next week? Yeah.
So we are getting to your quarter end and month end. So Monday is March 31st. So end of the quarter, end of first quarter. It's been a choppy one, certainly from a market perspective. We started the year quite buoyant, markets up, everything up. February is fairly choppy, and then we're seeing a generally a downward trend into March. So the uncertainty, volatility is kicking around. Gold continues to rally. Lots of things to watch and pay attention to as we head into next week. But as I went to bed last night when we were thinking about everything being pretty quiet this week, and then we come to more tariffs and trade talk that's caused more uncertainty in the markets. And while it is frustrating to watch and be a part of, oftentimes opportunities get presented into this environment. So certainly I'd be looking at businesses, and I spoke with a client yesterday just about some of the valuations out there. Some of the international companies are still trading 4, 5, 6, 7 times earnings, super cheap around the world. So lots of time and attention spent on what and if I should make any changes into portfolios. So lots to cover and lots to look at.
Yeah. Great. Thank you. Thank you, everyone. Remember to visit, subscribe, and follow us on YouTube and LinkedIn at Hart Investment Group. The link to our daily financial heartbeat will be in the caption of the videos. For our clients, please reach out to me if you have any questions or if you'd like to book a review meeting with Ben. Thank you for listening and have a good weekend.
Thanks.
Bye.
Take care.